First of all, thank you for being here. There will be definitely no line of code shown today, so sorry about that, but we're going to talk a bit more about the job market post-2023. And so not much code, but a bit of a step back on our careers. For a bit of context, among you all, are there anyone who noticed fewer job offers or fewer freelancers in your teams or harder salary negotiations in the past 2 years? Can you raise your hands if you noticed something like this? A bit half of the audience, not bad. So basically this talk is about putting figures on this feeling and then trying to understand where it comes from and finally what we can do about that. It's not that depressing, actually. To say a bit more about me and why I'm talking about that, I started my career as an Android developer in Paris in a few startups, and I've moved to management for a few years now. I've worked in different companies and have had a lot of work involving recruitment. So I have a kind of monitoring the market is something I do in my day-to-day, and so I can feel some differences. And like my job as a recruiter has been much easier these past 2 years, but my job as a developer a bit harder. Also, I've been mentoring for a while, and mentoring now for like newcomers on the market. Well, it's been tough, and finding the first job today has been tough as well. So there are a few things we can do about it, and it's quite nice to actually think and see what we can do and what are the actions we can take to improve the situation. So let's get started. First, what we can notice. Second, where it comes from. Third, what we can do about that. It should be fairly simple. We'll talk a bit about finance. We'll go not too in-depth on some concepts. Some things will be simplified. And I'll keep time for questions in the end if you want to go a bit deeper. So let's get to the first and I think most striking bad news. The job openings. If you look at one of the biggest source for job positions, you look at Indeed numbers, you can see like the most striking symptom that has happened in 2023 is a lot fewer jobs. So comparing November 2023 to November 2022, you can see a drop in 50% in the number of job openings on Indeed. This is not a small decrease, it's literally cutting in half. So quite a massive drop, and it touches software development and a lot more jobs, but software development is the most touched in the engineering area. I don't know if you noticed it in 2023 or if you felt like we were still on this trend where we lack developers, we are like in a golden age and everything, but basically those numbers show that there's some kind of end and it happened roughly at this time. What are the consequences on that? Well, the salary, when there are fewer openings, salaries, they tend to decrease. For Kotlin, a bit more than 10%. And it makes sense in a way. There are fewer open positions, so it's harder to find another job. So your power of negotiation decreases. And so you have more competition for jobs. You can choose the solution to decrease your salary to find a job, and that is the consequence. So fewer jobs links to smaller salaries. It's not only for Android. If you look at Java, TypeScript, Flutter, iOS, everyone has kind of the same numbers. Fewer jobs, smaller salaries, and yeah. I didn't include backend, it's the same. The only thing that is a bit different is everything AI related, where some of the machine learning engineers have an increase in salaries, but that's the exception right now. Now a few more bad news to come. I'm sorry about that. but only two. Next thing, the fundraising. If you've been in Paris in 2021 or 2022, you have heard about crazy fundraising. People raising 10 million, 15 million with barely any product, barely any customer base, but they still got tons of money. You can see a massive increase post-COVID area, and then it went all of a sudden much more quiet in 2023, and it kept on in 2024. It's still not that bad news, because if you compare to 2019 and 2020, it's still a bit higher. So it went back to a more normal amount. Still the same amount of operations, it's just like the amount that's been raised is a bit smaller, so companies grow a bit slower, and so fewer jobs open. It's all linked. Less money, less jobs, less money for developers. And finally, there's been an increase in the number of companies shutting down. When there's less money to invest in an area, so in tech startups, you end up having a few companies that were thinking, we'll grow, we'll keep operating for a loss, but it's okay because we'll raise more money. And this door has closed, and those companies, they are the 94 at the bottom, they have to close. They have no money left to run their business. And this means a few jobs that close, that are not replaced. So a few people get on the market, fewer jobs, more people on the market, same consequences, salaries decrease. That's the last bad news, promise. Do you know why? Like, if you raise your hand if you know why this is like this. Do you have an idea of the root cause? A few of you. Okay. If I tell you that the root cause is actually one thing, well, one main thing at least. Are you ready? Okay. The root cause, interest rates. Is it obvious? Not sure. Here is the interest rates per period. You have the start of, like, most of us are mobile developers, so you can see the iPhone, Android launch. You remember this time. Probably most of our jobs were created thanks to those iPhone and Android launches. Followed a long period of no interest rates, like very low interest rates. And then 2022 is the time when it went up. It went up quickly, and it went up by a lot. This, I'm trying to say that this is the root cause of why there are fewer jobs today. But why? First, why do we have interest rates that go up? Actually, interest rates, they are controlled by banks, central banks from different countries, and they are here to control inflation. So when you have inflation raising, you try to raise the interest rates so that the inflation is kind of contained. Makes borrowing money more expensive. And you can see in purple, inflation, in orange, interest rates. There's this kind of lag between the two. That's something that happens, that's repetitive. When inflation goes up, interest rates go up. But what is the link between those interest rates and our jobs? Well, for now, we don't see it. That's what I'm going to try to explain. But to explain that, we need to understand how some companies operate. You have some companies that we will ignore, which are bootstrapped companies. They operate with their own money. They grow with their own profits. They don't get outside money to grow. Microsoft is a good example. Back then, well, everybody was doing that. Meta is also an example, a more recent one, but they didn't need to fundraise to start. But there are a few companies that want to go faster, build a business that's stronger, that needs more money. And some companies like Uber, Stripe, or OpenAI currently, they do raise funds to finance their growth. Those companies, they are the ones that suffer from a lack of investment. So if you invest less, those companies suffer. Well, suffered when they were not on the market. To understand that, you need to understand a bit of the basics of investment funds. Investment funds, they are kind of similar to startups. They do raise funds as well. So they go to companies that have money, so like insurance, pension funds, and they get their money and tell them, okay, 10 years from now, I'll give you a lot more money back. And that's their whole business. So that's the first step. You raise money from people who have money. The second step, for 10 years, you deploy this money. You try to make this money grow. So you buy parts of companies, you put loans on stuff, and the goal is to have a lot more money by step 3. 10 years after, you give back the money, and you keep your extra performance. So if you said, you give me 100, I give you back 150 in 10 years, and you actually make 160, the last 10, this kind of extra money is part of the reward, and that's why bankers are so rich. They make money out of the extra performance. Understanding that, we are, as startups and as this ecosystem, we are really part of the step 2. A lot of companies that are founded, they hire a lot of developers to grow fast, and if they grow slower, there are fewer jobs for us. Now that we see that, we need to understand the investment strategies from these companies. When you're an investment fund, you don't want to put all your eggs in the same basket. It's something for everyone who invests. One of the first advices you can get as an investor is don't put all your money on the same place. If you put all your money on Bitcoin, well, sometimes you're rich, sometimes you're poor. You should diversify, try to have different assets. I've decided to simplify it for like 3 types of assets because it kind of makes my point. The reality is a bit more complex. An investment fund will invest in stocks that are listed. So you go buy some Apple stock, Uber stock, Google stocks, and this is part of your portfolio. You can also buy bonds, so like debt. It's created by countries it's a bit more stable, and it's getting better when interest rates get higher. So bonds are better in the current context than they were when it was a 0 interest rate period. And finally, you have a bit, it's like a margin of stocks that are unlisted. That are the startups. So you can't, you have to understand that there is always a ratio of listed to unlisted in the investment portfolio of an investment fund. So if you have fewer stock listed as a value, you have smaller stock unlisted. Understand that unlisted means that you can't buy or sell whenever you want. If you have stocks from Apple and you say tomorrow I sell it, you get the money back, it's okay. If it's unlisted, if you invest in a company that's not that mature and that didn't do an IPO or anything, it's hard to sell. There might be no opportunity to do it. Sorry. My bad. So it's not the most practical to invest in companies that are not listed because you are kind of stuck with your investment for a while. Now, knowing that, I told you 2 important things. The first thing is there's the ratio between listed and unlisted, and the second thing is when the interest rates they raise, then the bonds they get a bigger part in the portfolio because they are worth it. What is the consequence of that? The interest rates raise, so more bonds. And the investing in unlisted is not practical and you are stuck with your investment. That means that you will you will decrease the ratio of unlisted. And as you are stuck with your investment, you will basically stop investing in unlisted stock. And that means stop investing in small startups, and a part of the ecosystem doesn't get money anymore. So a lot of jobs are not created anymore. And so a lot of our jobs are not created. More people on the market, fewer jobs. You add the company closing, and you get the current situation. Fewer investment means more bankruptcies, which means more people on the market. There are fewer jobs because companies, they have less money to grow, and you end up with lower wages. Is it clearer now? Okay, all good. So if it's clearer now, we can see the non-depressing part of the talk, which is what we can do about that. And my goal here is to try and bring some ideas. There's no miracle, there's no magic solution, but there are a lot of things we can explore to actually make the best of the situation. I want to talk about three things. I want to talk about first highlighting your value. In a company, you can be seen as, well, a wage to pay, so money going out, but you can also show the value you bring, and so show that it's worth it. Paying you is worth it. The second thing is always learning. We are in an era where technology keeps evolving, and we can keep learning, coming to Android makers, for example, and learn a bunch of different ways of doing tech or different areas of the tech. And finally, I want to talk about optimizing the search. So there are fewer jobs, but there are still jobs, and some of them are, well, more trendy than others. And so knowing that, understanding that, makes you waste less time if you want to find a new job. So first, about highlighting your value. My recommendation is to try and go a bit further than what used to be necessary to find a job. I've had a lot of interviews where developers had to show that they were able to make changes to a code base. They needed to show that that was it. They could have applied the same technological solutions to any market, any type of companies, any product, because what they were required to do was just have technical solutions. What I suggest you do is try to take a step back and understand that we do tech for a reason. We build products for reasons, and the most direct one is to answer the needs of customers. So when you reach a job interview, try and remember and highlight what you did for your customers. What was the real impact on their lives? What change you made that actually improved something? And if you manage to do it, then try to understand the impact on customers. How did it impact your business? How did it make it grow? Did your feature make more customers join the company? Did it make them pay more money? Did it make your product more sticky so customers stayed for longer? Having those kind of information in your head when you interview, showing that you know why you're doing things and not just how, will help you a lot. Really focus on the why, highlight it, show to your company that paying you is actually worth it. Your salary is a lot less than what you're going to bring to the company, because changing those lines of code will improve products, will change people's lives, will make money for the business in the end. Understanding the why is really a good way to find a better job or to negotiate better your next pay raise or anything like that. I think you can also highlight some of the skills that are non-technical. Knowing many technical solutions is still useful. Being able to solve a lot of problems, it is still useful. But being able to understand why you're working, what are the end results on your business, of your actions, being able to also have different technical solutions for different moments in your company lifetime. If you're about to run out of money, you want to aim for really short term. It's not necessarily the time when you will do the most complex architecture or start a big refactoring project. You might aim short term, small, and really business driven. And when you have a bit more time and your velocity has slowed down or anything, that's the time when you will find longer term solutions that will enable you to create long-term value. And finally, you can also show that you are aware of who you work with, who you work for. You will have final customers, but you will have also a lot of internal customers. Being able to think that you can build a product, but you can also help automate so many processes in the company and use tech for a bunch of reasons. If you see today, a lot of people discover that you can automate so many things. We knew that as tech people, but some people in marketing, in customer operations, they discover that, and you can help them, and you can show that your impact can go to your customers, but also internally to your company. The second thing, and I think you are aware of it because you're here, keep learning. You can use new tooling, and that's something that's quite funny, but if you see everything about AI, you can hear everything and its opposite. Google tried to measure it and try to see what are the improvements if you increase the AI adoption. And the biggest thing is on documentation. So I don't know about you, but that's not my favorite part of the job. So when I see that AI can improve documentation quality, I'm quite happy about it, and I want to use AI more. What's the best way to do it? I'm not sure yet. I will keep learning. You can see a lot more in this research document, like the impact of generative AI in software development. You can see that actually there are lots of things related to AI. I won't go deeper into this subject, but there are lots of sources where you can actually improve your job by using the new tooling that's available. You can also use all the abilities of the debugger that we see this morning, because it's quite useful. Another thing I encourage you to do is learn about your tech, but learn also about the surroundings. Understanding what your company is trying to do. Is your company sitting on a lot of cash and trying to stabilize its revenue? Is your company kind of struggling and aiming for short term? Understanding if they want to grow their user base or retain it. Those different strategies have different solutions. Understanding what the company is trying to do makes you a more valuable developer. Understanding the market trends is also quite useful. So if you know what your company is going to do years from now, and trying to understand and anticipate and invest your time on the most useful parts of your code base, you will save time. And finally, you can prevent from doing bad moves for your career. Joining a part of the business that's struggling, that's going to close, is not the best move to do. Going to something that's thriving is probably a better move. So if you have opportunities to move teams to a struggling part of the business where you can have no impact, don't go. If you can have a massive impact on your business, go. And try to think about how you can help your company and learn about how the company operates so that you can have a bigger impact. And my last thing about learning is for the same feature that you will code, you will have a lot of different consequences. If you code a new feature, maybe you will increase the cost of your infrastructure, your monitoring and everything. Maybe you will actually cost money to your company. Maybe your feature will also save costs. Will remove useless logs, or will remove the dependency from a paying software that you were using, and then you will make money for your company, and that's much more valuable. Same for the architecture. Maybe your feature will facilitate next features. You will code an enabler, and next features will go out faster, and that's a good thing. Otherwise, maybe you are creating debt in making your product much more difficult to evolve, and that's a bad thing. Same for your users. A same feature can help a user or frustrate him, so try to think about it. And finally, try to think about your business. Will your feature make customers buy more, make them retain for longer or anything? That's a good thing to understand and try to improve. And finally, about the job itself. We are in Android makers, so majority of us, they make things with Android, but what do they make it for? If you go back a few years, well, crypto was everywhere. And that was the next big thing, and that was where the money was at. A lot of crypto companies were raising massive funds to do stuff. Today, AI is the buzzword. So you see OpenAI raising a record amount of money. And probably if you see some of, well, jobs in this sector, there might be good opportunities, there might be bad opportunities as well. But that's something that is definitely interesting. What is it about tomorrow? Can we anticipate? Will we talk about healthcare? Will we talk about defense? Not sure, but the world is evolving, so a new sector will appear tomorrow. If you already know, you already aim for it, you might be in the best companies of the future. So don't hesitate to try and aim for sectors that you don't already know. Second thing is the location. The remote jobs were at an all-time high in February 2022. They are less frequent now. If you can find jobs that is near where you live, it's probably easier today than finding a full remote job. There are still some, but it's a bit rarer, and with more competition, it's a bit harder to reach. So try and think about different locations where you can still have a successful career and expand the location. And finally, we are Android makers. But being able to make things with Android doesn't make us only mobile developers. We have a lot of opinions about what is the next priority for our product. And so we are kind of product managers. We have a lot of advices to give to different teams because we know how to build stuff. So we are also consultants. There are tons of performance processes that we improve on our day-to-day life. So we are also engineering managers. And with the ability, whether you do Java or Kotlin, you can definitely build the backend. So we are also web developers. So if you have to change jobs today, don't limit yourself to only Android jobs, but you can do a lot more with your current skill sets and probably bring a lot more value, or at least more versatility to your company, being able to do a lot more than just apps in the end. So yeah, that was basically all for my recommendation. If I do a brief summary, am I good in time? Yeah. What have we seen? Well, first we've seen that the market has changed. We were in kind of a golden age, and we are no longer in a golden age. It's not that bad, though. There are still a ton of jobs available, and it's getting a bit better this year, especially with machine learning jobs and everything. We also understand the source of it. So if any day you hear again about interest rates changing, well, maybe have a look at the jobs as well, because there's a consequence. And finally, there are lots of things we can do, and I can't emphasize it enough. There are lots of things we can do, like expand our field of vision, understand that making apps is not the only thing we can do. We can help in so many things in our businesses. We can have such great results and be so valuable. And so if you think outside the box, if you go farther than the technical problem that you solve, you can have successful careers. And that's it for me. If you have questions.
Thank you for a very interesting talk. I've observed a similar dynamic from my perspective, so it aligns with my observations. As you mentioned, in the golden age, right, there was more developers maybe than jobs, right? And employers used to complain that they just couldn't hire enough, right? It was hard to hire. Now that maybe there are more developers than jobs, and employers are, however, more focused on impact, do you find the sentiment to be similar, that it's, again, hard to hire because maybe the focus on impact and the barrier is a little too high?
Honestly, my life as a recruiter is much easier today than it was 2 years ago. Currently, I'm head of engineering, so I work with different engineering managers and a few teams. So a few years ago, I wanted to hire an engineering manager, and there were none on the market. And I could find sometimes a developer that was willing to do the job. Today, if I look for an engineering manager, I find a former head of engineering, former VP of engineering, former CTO. And there are a lot of, like, for example, management positions that have disappeared. And so you have lots of people who are really skilled and qualified for the job, but not that many of them who actually think about there are proper value for the business. And I have an easier time finding people because there are a lot more to look for, but there are still a lot of people who don't sell themselves the best way they can. A lot of people who behave the same as it was 2 years ago. The market is not the same. There are still lots of valuable people, and it's just, some of them are not, they don't sell themselves the best. They don't show that they understand what they do, why they work, and that's a bit sad. But it's still easier from a recruiter perspective than it was 2 years ago, where you had basically no choice.
Hi, thank you for your talk. I want to ask a question about contracting. Do you think that contracting was impacted more or less than full-time jobs in this market? And is it recommended to move out from full-time job to contracting?
In a way, it was super sudden for contractors in the company I was in 2023. Basically, in January 2023, we cut all the contracts because we knew that we couldn't raise money and our runway was not that long and we need to expand it. And the only thing you can do in France to cut money spending is cut contractors. So that was a bit sad, but all of a sudden they were all gone. And that was brutal for them because many companies thought the same way. And so it's kind of the end of the golden age of the contractor as well. But there's still a lot of value of having someone solve a specific thing for a limited time frame where you need someone for 3 months, for 6 months, and there's still value in having contractors. It's just not that great a market where, basically a few years ago I didn't want any contractor, but I didn't have a choice because people available were only contractors. Today I have a choice and I still work with contractors, but it's for specific reasons, for like time-limited missions. So if you've been a full-time employee all your life and you want to move to contractor today, you are choosing the hard mode, but it's doable. It's still doable because there's still value in doing it, but sell yourself well, really.